good afternoon. You've tuned into your stocks on CNBC-TV18, coming live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala, and thank you so much for tuning in. Markets range bound, nothing much of a move that we've seen since the last time I spoke to you all. At 1 p.m. also it was around this level. Now also it's again around that level, almost flattish in trade. 22,500 though is what the Nifty is managing to hold on to. Broader end of the market, specifically the small cap, that's where the outperformance is coming from. Mid cap as well as the banks clearly under pressure. IT among the top sectoral loser in today's trading session as well. So yes, that's what we're watching out for in terms of the market. Very, very range bound, not much of an excitement on the upside or the downside. So yes, we are okay with this right now. But let's get started with the show. This is a show where we solve all your stock related queries, and to solve all those doubts today, we're joined by Shahina Mukadam, independent market expert, as well as Aditya Agarwala, head of research and investments at Invest4edu. Thank you so much, Shahina, as well as Aditya, for joining with us on the show. It's a pleasure to have you all both. I'll start with the queries because we've spoken enough about the markets and where the range is. So let's get started with the query for today. The first query is coming from Stanley, who's writing to us from Goa. They have an investment query. He wants to know specifically in terms of Central Bank of India for a period of 5 years. He's asking if it's the right time to start investing in this one. Shaina, good afternoon. Coming first to you. Q3, robust loan growth is what the company managed to see. They've seen some bit of a high write-offs as well during this quarter. What is your view coming in for Central Bank of India? Do you think on the fundamental front for a long period, it's good to invest in this one?
Afternoon. See, basically, while fundamentals have been improving, they have been putting a lot of effort in improving the balance sheet. They're selling they have brought down their NPAs. They're looking to monetize some of their assets. They have brought down the NPAs substantially. So on the, operational front, things are looking much better than what they were, say, 3 years back. So at the same time, I would say, I would consider this the best time to invest in central bank as of now. Couple of reasons. First being that the government still owns 93% of the equity. And they have announced that it would be one of the banks that would have an OFS. I think it's somewhere close to about 2,000 and odds that is being spoken about. Now that itself will not bring down the equity capital to 75. So there is going to be an overhang of this liquidity or this overhang of stock in the in this stock. Secondly, you see valuations price to book is about 1.2 times. So the combination of these two factors, while you may not see too much of a price, correction from here, you may not. But at the same time, for the price, for you to get an appreciation from here, to get a return in the market over the next 1-2 years, in my view, is going to be a bit difficult. So I would say you need to wait. If you're looking at a 5-year time horizon, look for a better price or a better time to enter.
Okay. Surely keeping an eye out on Central Bank of India. Fundamentally, it does look nice, but better price, better time is what one could watch out for, is what China is saying. Aditya, good afternoon. And what's your view coming in on Central Bank of India? In the last 6 months, we're seeing a bit of a correction, right? A decline versus something like comparing the top public sector bank, then that would be SBI, which has fallen 6%. But Central Bank of India has seen a sharper fall. Does it merit to look at Central Bank of India on the technical front, or is there any other PSU bank that you would look at?
Hi, afternoon, Vinny. Thanks for having the show. Clearly, as you mentioned, this is one stock which has corrected significantly. In fact, most of your small PSU banks have corrected significantly of late. It has corrected. Risk to reward is in favor of going long. Maybe at current levels, 36, 37 is a good support area for the bank. You can look at venturing into central bank at current levels. But as you mentioned, if I have to pick one stock or one or two stocks apart from central bank, maybe I'll go for a Kotak Mahindra Bank from the private sector space and maybe an SBI from the public sector space. Stick to large cap names. I would not be too interested in getting into a small or a mid-sized bank at current levels, because I still see a little bit of correction which is still due in some of these banks, which can come in the next few quarters. So my suggestion would be stick to large cap names, better SBI within the PSU name and a Kotak Mahindra Bank from the large cap space are these two stocks that I would suggest. But yes, central bank, given the fact that it has corrected significantly, if you have a 5-year time horizon, maybe you can look at it, but keep a stop loss of around 35, 36 rupees on the downside.
Okay, let's move on to the next query for today then. We have Kunal Shah, who's writing to us from Ahmedabad, holding 70 shares of Titan at a price of 3,000 rupees per share. Now, currently, obviously, he's just making very little profit. 3,100 approximately is what the stock is trading at. Wants to know whether he should book profits, stay invested in this one. Shahina, let's come to you. On the fundamentals, Titan, what is the view coming in on this one? Recently, we also had some brokerage notes that came in from Goldman Sachs, where they maintained their buy rating. They said that, they're expecting the EBIT margins to stabilize from here on. What's your view for Titan?
Yes, Vinny, I agree. Margins will remain stable. At the same time, I would say that it is better to book whatever little profits you're getting for now. And given the fact that the management is strong, they have got a good business opportunity in the long term. You could relook at it, re-enter it after a couple of quarters or months or whatever. Now, a couple of reasons. First is, of course, we have the big, elephant in the room, which is the US tariffs, which are likely to come. Jewelry, as you know, we are exporting from India. Our tariffs are much higher than the US tariffs. So we will have to see now what tariffs US will put on jewelry and how how the Indian government will, sort of counter that. So all these things are in the air. Also, Titan will be specially impacted because Titan, in fact, if you saw in the last year, they opened their first store in the US. And they were talking of actually having, the international markets, US, Dubai, Middle East, being one of their growth markets. So to that extent, it's going to be a negative. Also, if you see the domestic market, while Titan, if you like historically, I still remember it used to be, we used to say it's the only stock if you're looking at investing in that sector. Now you've seen so many new entrants that have come in with their IPOs. They have got flush with funds, and they're talking of they're talking of expansion and setting up new stores across India. So to that extent, competition is increasing. Also, you see gold prices have gone up. Gold prices going up affects their margin. So all these factors put together does put a upside in terms of stock performance over the shorter to medium term. So I would say it's better to book your profits for now.
Okay, better to book your profits for now, and then you can enter maybe at some lower levels or in the next few quarters. If you see it, then there will be a buying opportunity, is what China is saying. Aditya, what is your word coming in for Titan? And, do you also concur with China's view of, selling Titan right now and maybe entering at some other point of time?
Maybe not selling, but if you have a longer time duration and a gestation period, then maybe you can continue to hold. But if you're a trader, I don't see too much of an upside in Titan clearly. I think it can test levels of 2750 to about 2800 on the downside. If it breaks this key support level of 3050 to about 3000 on the downside. So maybe place a stop loss somewhere around 3000, and you can see how the stock behaves in a pullback in the market. It can test levels of 3150 to 3200 on the upside. Then you can look to exit. I'm not too bullish on the stock as well. So I think it's better to book out profits on higher levels, or maybe keep a stop loss somewhere around 3000 odd levels on the downside.
Okay, keep an eye out on those levels for Titan that Aditya mentioned as well. Not too bullish on this one. Let's move on to the next query. Bajaj Housing Finance. That's the next stock that we talk about. PC Achaya, who's writing to us from Bangalore, holding 150 shares of Bajaj Housing Finance. This is purchased at a price of 171 rupees per share, making a loss on this one. Wants to know the outlook for the stock going forward. What is your word on this, Shahina? Long-term story intact?
Well, the very long-term story remains intact because you know that they were one of the best IPOs that came into the market in terms of the price performance on listing. But after that, it has been a one-way down, and you've really not seen those levels again. So I think, and to get to those levels again is going to take a long time. The fact being that it is, one of the most expensive housing finance companies, despite the fall that we saw in the last couple of months, it's still available at about 5 times book. So that will limit your upside in terms of price even from here. And while the funds from the IPO have enabled Bajaj Housing to grow double that, like they're growing about 24, 25%, but that is double what the overall industry is growing. But to an extent, you could see that softening over the next 1 to 2 years. So I would say that, it is better to switch from Bajaj Housing. Even Hoodco is available at much half the valuation than Bajaj Housing. So it is better to switch.
Okay, switch maybe from Bajaj Housing to Hutco. Long-term story intact, but still a better bet right now would be Hutco. That's the word from Shahina. Aditya, your view on Bajaj Housing as well. I know it's listed just last year in September, but anything that you could be able to judge on the technical front?
Just going purely by the chart, Vinny, I think there is an up move in the stock for sure. I'm not too sure if it will test 170 immediately. It will take some time because his buying price is literally very high. Almost after the listing, he's bought it. 150 to about 160 is what I see on the cards as far as Bajaj Housing Finance is concerned. So if he's okay holding on to it till 150, 145 odd levels, then he can revisit and look how the stock is going to perform in the next 1 to 2 quarters. Then he can continue to hold. Otherwise, I also concur with China that Hutco is definitely looking more stronger on charts as well, and he can actually look to make a switch from Bajaj Housing Finance to a Hutco. Immediately, maybe he can continue to hold for maybe a target of 145 to 150 on the upside, and if it doesn't cross those levels, maybe then he can make a switch from a Bajaj Housing to a Hutco.
Okay, maybe at least limit your losses. At least that would be the bet for him, right? 145, 150, if that comes, then you can look to sell at that. But let's move on to the next query for the day. We have this coming in from Satyamurthy, who's writing to us from Noida, holding 80 shares of Tata Technologies. This is at a price of 1,000 rupees per share. Stock is tanking right now. It's at 668 from what they have bought it. So clearly a sharp loss, that's what they're making. Now wants to know, should they continue to hold this one for another year and a half, or book out of this one? Tata Technologies, your view on this one, Shahina. You know, obviously, this came in from the Tata pack after a couple of decades as an IPO, so everyone was very enthused by this one. But stock has not given the viewer any profit right now. What is your view?
Yeah, absolutely. And, it doesn't make me very happy to say that even at current levels, Tata Group company, it's like the technology that they have both for EV as well as auto is very superior. But at the same time, I have to say that, it is better to even switch from current levels, book your loss. You can always relook at it couple of quarters down the line. There again, valuation, despite the big fall we've seen, is very expensive. If you look at it compared to even the large techies, like it's not a large cap, but still large cap techies, its price to book is 8 times, P 40 times. So to an extent, over the next 1 to 1.5 year, which is the timeline which the investor has, I don't see, the stock rebounding in a very major way. Also, as you know, that last quarter, third quarter numbers were pretty disappointing. So it's not that this high valuation is corresponding, with some very good numbers. So I would say it's a switch, sell.
Okay, so it's sell. High valuations is not corresponded by the numbers that have also come in Q3 as well. Aditya, your view on Tata Technologies, because right now when I'm seeing it, since the day it's listed to now, we just saw it moving flat and then the decline has just started and not stopped. What should the viewer do?
Oh, clearly it's in downward spiral, Vinny, and I don't see any reversal immediately on the charts as well. The only factor which could play in favor of Tata Technologies from here on is I see positive divergences on multiple time frame charts, which tells me that the correction is losing steam, and maybe at some point of time around 600 odd levels, stock can actually form a base, and from there on can start to inch higher. But again, his buying price is significantly higher, close to about 1,000 rupees. I don't see the stock coming to those levels anytime soon. All that I can suggest is maybe wait out for some time. If there's a short covering rally which can come in the stock, then you can look to exit at higher levels. But clearly, the trend as of now is down. Until the time price tells me that the trend has reversed, there's no reversal in the stock. Only about 700 is when I would look to hold on to the stock, maybe for a higher target price. But if he wants to continue to hold, maybe look for a short covering rally in the stock and then exit. Otherwise, there's nothing too much in the stock as of now.
Okay, Aditya, thank you so much for that. But on that note, viewers, we're going to actually slip into a very short break. After the break, we'll come back with more of your stock-related queries, so don't go anywhere. Welcome back to Your Stocks. Still have with us Shahina Mukadam as well as Aditya Agarwala to solve all your stock-related queries. Let's keep it going then. And we have this next query coming in from Shishir, who's writing to us from Vidarbha, who's holding 1,200 shares of Tata Motors. This is at a price of 684 rupees per share. Stock is around the buy price right now, 647 is what it is at. He's asking if he should add more shares or continue to or stay invested in this one without adding or averaging out a bit more. Shahina, your view on Tata Motors?
He should stay definitely invested. In fact, I think he can also add. That is what I believe is the medium-term view. A couple of issues. One is, of course, the demergers on cards. They are planning to, separate their CV, PV business, which domestically will be, a value add. Secondly, while US is a big market for Tata Motors, it is a big market actually. The thing is, it is though, because they're present in UK, and while tariffs is going to be an issue going forward, I think to an extent, any devaluation in the pound will actually offset whatever issues that they will be in tariffs. Now, of course, we'll have to review everything as and when they crystallize. But I think at the same time, in terms of valuation also, it is not expensive. If you see EV by EBITDA is about 7 times, P is also pretty low. So it is a reasonable safe stock to hold as of now, in my view, with the way things are evolving in the global markets for autos. So I would say you could add.
Okay, can look to add right now is the word coming in from China. Aditya, your view coming in on Tata Motors, out of Feb, it was that one of these underperformers in the auto pack, right? So what are we watching out for from Tata Motors on the technical front?
Oh, Vinny, I think so. It's a stock to watch out for in the four-wheeler space. In fact, I would stick my neck out and buy at current levels as well. I would recommend you can go ahead and average the stock at current levels. 600 is a very strong support for the stock, and stock already tested that 600 support level. From there, it's bounced back. So I'm looking at a target of 750 to about 850 on the upside in the near term, and I think so. It is one stock which can see a tide turning very soon. At 1,000 rupees, everybody wanted to buy the stock. Why not at 650? And the charts also suggest that it's bottomed out. It's formed a base, very good base around these levels. So definitely thumbs up. Buy at current levels. Stop loss of 600 may be a decent one. Look for a target of 750 to about 850 on the upside.
Okay, let's move on to the next query. And Kiran is writing to us. This is an investment query, more like it. Kiran is writing to us and she's saying that she wants to invest in the banking sectors, asking for some of these banking stock names. You did mention some of the names, only spoke about Central Bank of India, but anything specific that you would tell Kiran to look at right now?
See, in the large cap, she can look at, yeah. So in the large cap, she can look at something like an HDFC Bank. It is currently priced to book around 2.7 times, which is much lower than its historical averages. Now, this of course is combined with some slower performance that we're likely to see in the next couple of quarters. One is because while the deposits are continuing to grow at a healthy pace of about 15%, the overall loan growth is a bit slower because of the ratio. They have to, they cannot really push their loan growth fast as of now for a couple of quarters. But I think it is a strong bank to hold for the long term. You can add this with a smaller bank, Federal Bank, where the valuations are very attractive. It's about 1.1 time book. The new management is in place and they're talking of improving the overall balance sheet numbers, quality of the balance sheet. So I would say it could be a stock that you could add to your portfolio. This, of course, in addition with the other stocks that were mentioned earlier in the show, you have Kotak Mahindra that also looks decent.
Okay. And Aditya, which stock would you be suggesting? Is it private banking or public?
I would stick to a private bank, Vinny, and Kotak Mahindra Bank is something which is on my radar again. I think this is one stock which should be in your portfolio from the Nifty 50 basket and from the private sector banks. After massive underperformance over the years, I think so it's time for Kotak Mahindra Bank to rise and shine, and maybe for a target of 2,200, 2,400. You can buy the stock at current levels, hold on to it. The second, of course, HDFC Bank and Federal Bank, these two stocks also look good to me, but the top bet will be Kotak Mahindra Bank for me.
Okay, Kotak Mahindra Bank for Aditya. But with that, that was the last query. So thank you so much, Aditya, as well as Shahina, for joining with us on the show. Happy weekend to both of you all. And viewers, happy weekend to you all as well. With that, we're going to wind down this edition of Your Stocks. Thank you so much for tuning in. Always remember that you can email us your queries on the email ID that will be there on the screens. And up next, you have Closing Bell to take you through the last hour of trading.